this is Daniela Cambone, and welcome back to the Daniela Cambone Show here at ITM Trading. For those of you who have found us, thank you, and welcome to the show. Today, we are being joined by Lynette Zang, the Chief Market Analyst, and my wonderful colleague over at ITM Trading. Lynette, so nice to see you. I wish it was in person again.
Especially since probably where you are, it's really freezing.
Yes.
But you are missed. It'd be nice for you to be here too.
Yes, and I just want to say the feedback that we received from your home tour, and for those of you who missed it, you need to watch it because you'll see the other side to Lynette, which was just beautiful. So I just want to thank you again for that because it was just so well received, and people just want more and more and more, and we could talk about that later.
Well,
But first, we have a lot of
when you come out the next time though, Daniela, then we can go do that at the bug out location.
Well, that's what the people want. Those were the comments. They're like, we want to see the bug out. So we won't say anything more. Perhaps we're planning something very special, but that's what we're going to say for now. Lynette, I'm happy you're on, joining us to kind of kick off our Outlook series, which I like to do every year with obviously our fan favorites. I want to start with one of the biggest headlines this week about job openings unexpectedly falling in October to the lowest level in 2 years. So is this a sign of a cooling labor market? Just for some stats here, employment openings totaled 8.73 million for the month, a decline of 6.6%. The number was well below the 9.4 million estimate from Dow Jones and the lowest since March of 2021. Were you surprised by this number, Lynette, or?
Actually, I was not really surprised by this number because, you know, with the rates being up where they are and the corporations so dependent on debt and having to roll over this, they have to cut corners. And so what the Fed wanted, which was a cooling job market, because clearly the public being able to ask for more wages was causing all of this horrible inflation. So no, I was not surprised by this, maybe in how long it took for this to happen. But we are really still at the very beginning stages of feeling the impact of those rapid rate rises. So yeah, no, and I think we're going to see more of it too.
Well, to that point, do you think this statistic or, you know, what's happening in treasuries and whatnot and with the yields is going to change the course of action that the Fed will take at their upcoming December meeting?
I think the Fed wants to stay the course and not surprise the markets because they are really fighting for their credibility. So, yeah, I don't think that this is going to make any difference in the choice that they make because it's not like they want to stimulate the economy. They still need to slow it down.
So let's look at what's happening in the banking space and what you can expect or what we can expect in 2024, because a report posted on the Social Science Research Network found that 186 banks in the U.S. are at risk of failure or collapse due to the rising interest rates and a high proportion of uninsured deposit. You know that we've been speaking ad nauseum about the bank failures and even about how the mainstream media almost forgot about covering this. But I bring this up because today, Lynette, Wells Fargo announced and warning of a severance cost of nearly $1 billion in the fourth quarter as layoffs loom. I mean, $1 billion. So,
right.
What can we expect in 2024 with the banks here?
Well, you know, the banks are in such a precarious position, and I think that they will likely a major bank failure would likely trigger that Fed pivot that's making the interest rates drop and the markets rise right now. But I think we're seeing actually a shift in debanking, you know, and I think that more money is going privately. And if you look at what the banks have been doing, this isn't really new news. They used to be market makers. In other words, support the treasury market, support the stock markets. But that's shifted to private hands, which is also where a lot of money is now shifting. So the deal making, the money that the banks used to make on creating a lot of those deals is seriously in jeopardy with the rates where they are right now because everything is starting to slow down. And, will we see a Fed pivot next year? Probably. Of course, what's going to happen to inspire that Fed pivot is going to be, it could be a bank failure, but it could be an explosion in the debt markets and the treasury markets. I mean, there are a lot of black swans that are flying all around.
And this is what you try and educate the folks on, right, Lynette, is if you
Absolutely.
do have large amounts of money in the banking system, like, yes, a part of it is insured and whatnot, but you always say, like, why would you be putting yourself at risk like that? Like, why would you be having all your funds in the banks?
Well, I do say that. And the interesting thing is, whether you're an insured depositor or an uninsured depositor, the FDIC has less money now in its coffers in the DIF fund to pay for failing banks than they did back in March and April when we experienced the kickoff of the bank failures with the regional banks. So the insurance, I mean, when did they do that? Well, they did that back in the 30s with all the other bank failures. And it was just about perception management, getting you to think that everything is okay. And in reality, things are not okay. And I think that this is the lead up to watch the bail-ins. I don't think they were ready for it in March and April, but I think they've been getting ready for it because there's no money in the DIF fund.
To pivot, I want to talk about the impact or what we're seeing on the consumer, the day-to-day American, right? Because I know you alluded to this in one of your last videos, that online spending, shot up nearly 8% year over year to 38 billion during Black Friday and Cyber Monday. So the consumer was absolutely present. But at the same time, Lynette, we read headlines of 60% of Americans when can't afford groceries, that they get to the checkout line and they're having to put groceries away because they just can't pay that. So what is the truth when it comes to the consumer, do you think?
Oh, there's no doubt about what the truth is with the consumer. Really what's been supporting even the consumer spending has been those that make north of 100,000 a year.
Yeah.
And that used to be a lot of money.
Yeah.
That's not a lot of money these days. So the truth of the spender, even when they get up there, if they can't break that down into 4 easy payments, which is a lot of what happened and is happening during the Christmas season, they're using those money. It's not the transfer, but where you can break it down into small pieces in order to make the purchase. And consumers are they've kind of thrown any caution to the wind, because when you know that you're beyond in trouble, I mean, what do you do when you know that you can't pay it anyway?
And it makes me think how many, maybe the consumers are just using those, pay later scams, as I call it, for whatever material objects and maybe not so much for groceries.
That's the scary part, Daniela, is they're actually using that quite a bit for necessities, for groceries. You can live without a blouse, but you can't live without food. And that's the scary part.
So this brings me to my next question, because I know you did a deep dive on treasuries, right?
Yes.
So we're seeing all the headlines now. Treasuries are the comeback kid. They've resumed their rally, as the further labor market cooling reinforced speculation that the Fed will be able to cut interest rates. But just in September, they were out of fashion. Now they're the comeback kid. Again, Lynette, what is your analysis? Because I know you did a lot of research on this, on what's really happening in treasuries and what is the takeaway here?
Okay. Well, first of all, treasuries are still in deep doo-doo. Their volatility, as is the volatility in everything, has come back down, but that doesn't mean that they're any more liquid. The reason why you see the change in the interest rates is because of the anticipation of the Fed pivot pushing interest rates down. So right now, the markets are doing the Fed's job, but markets are really fickle, particularly when they no longer believe the Fed. So, I think that going into 2024, we definitely, well, I can't say definitely because I can't guarantee anything other than I'll show up and do the work. But I definitely think that we will see a major crisis that's going to happen into 2024 to force the Fed's hand. And the market could actually push that because of what they are anticipating.
What kind of major, like, is it a financial major crisis?
Oh, yeah. Between the banks and also in the treasury bond market and in the debt markets in general, I think that with all of the debt that needs to roll over in 2024, and these corporations and these governments cannot afford this level of interest because we had been given that hopium of zero interest rate policies. So rather than taking advantage of it and doing it the right way to reduce debt, corporations and governments use that to load up on even more debt, and that debt has to roll over, and a huge chunk of it needs to roll over in 2024 in a much higher interest rate environment than they had when it was in zero interest rate policy.
Right. Who's
So,
buying the debt?
okay, who's buying the debt? Yeah, that's such a good question. And one that I keep asking. And when I look at who's buying the debt, it's primarily institutional buyers, which are those that buy for the public, right? So they're transferring the risk of the treasuries from the stable hands like banks, which really haven't been supporting that market. And heck, even the Federal Reserve, if you look at their balance sheet, they continue to run off their balance sheet. It's still at nosebleed levels, but it is a lot lower. And sovereigns, foreign governments, I mean, the stable money that really doesn't care what the bonds do in terms of price action, they're leaving these markets, and the buyers are in the public markets, whether it's mutual funds or ETFs and pension plans, so retirement plans, IRAs, 401ks. That's what's really happening right now, is this huge transfer of risk from the few, from the one percenters to the many, to the naive public. And that scares me even more. I mean, it is one way to take care of the retirement crisis, isn't it?
Valid point. And I know a big part of your strategy, obviously, your solution is owning gold and silver, and everyone wants to get your take on the breakout that we've seen in gold. Yes, we're at all-time highs. And yes, mainstream media, once again, is interested. I'm getting phone calls. Can you comment on what's happening in gold? You know, when you get those phone calls, you're thinking, oh.
Exactly, because we don't really want to talk about it.
Exactly.
And there was a big short squeeze because we did, gold, spot gold, and I always like to differentiate between gold, physical gold,
yes,
and spot, the contract, because the contract is so easy to manipulate. So what do you see? You saw spot do a triple top, and then on Friday it was at a quadruple top. And then if you look at the action, because it actually broke out and made new highs, and especially in the futures market, and then all of a sudden all these short sellers come out to whack it below. So we have to see if that breakout is pervasive, but my guess would be yes. And my guess also, well, it's not a guess, it just always happens. There was, I think it was Wednesday or Thursday, I have to go back and look on the chart. It was a gap up, which means that the price of gold closed here, and then the next morning it opened up here, right? And then it continued up to go to new highs. Well, whenever you have a gap, and I think this is so important for viewers to understand, because whenever you have a gap, that gap must be filled, either higher or lower, doesn't really matter, but there's that gap. So number one, a rising gold price is an indication of a failing currency, and they don't want you to realize the currency is failing. So once it broke to those new levels, it had to be whacked by the central bank minions, at least in terms of the US dollar. Technically, I can't tell you when it's going to fill the gap, but it wouldn't surprise me to see it go down now and fill that gap before it goes to much higher prices. And I think that that's critically important for those people that are looking at positioning into asset protection gold, because there's all different kinds of gold. And some gold is impacted more by the spot market than others. So, I mean, it broke out, and that was from a triple top, and that is major. Those things don't happen often or easily, and technically.
Right. No. And you know, when Goldman Sachs is calling $2,500 gold. But let me ask you this, Lynette. Is a positive to the rallying gold price, right, is it gets interest from the public, right? Like I had a girlfriend that I haven't spoken to in 10 years, call me up saying, how do I buy gold? Right. So is that a positive, that in a sense, at least it wakes up people who had never thought about gold, right? Or were never educated on owning gold or silver, to the idea of, hey, there's other things outside of the system.
Yes, and we've been witnessing that. And it is the public buy. I mean, look at, they're having gold bars at Costco, and they're selling out.
Yes.
Right?
Yeah.
They're selling out as fast as they get them, and that's an indication of public awareness. And so I did a video not that long ago on the trend cycle and where we were in the trend cycle and recognizing those patterns. And so none of this is unusual, but what will take it to the next level, and I'm just referring, well, no, I'm referring to both the spot markets as well as the physical only markets, is that public awareness. And that's already underway.
Mm-hmm. And I'm happy you brought up the weakening currency, because I want to bring up this news item with you about Vladimir Putin's visit to Saudi Arabia. Now, it's extremely important because it's his only third trip outside the former Soviet Union since the invasion of Ukraine. The other two trips, Iran and China. So if Russia wants to de-dollarize the global energy trade, and the US obviously does not, then Saudi, the world's biggest oil exporter, will likely hold the key to whether the US dollar retains its primacy over the global energy markets. So which way, Lynette, do you think Saudi would turn?
Well, I think we've been watching it as they joined the BRICS. I think you can see it in even the new relationship, or the tighter relationship that they're getting with Venezuela. I think our days, the dollar's days as the world reserve currency, are quickly coming to an end. And you're right. I mean, with Saudi Arabia, that enabled us to retain that title all these years, and I think it's over.
So what would be the counter argument when people say, but look, Lynette, look at Argentina now. They actually want to adopt and embrace the US dollar. So yes, there may be people turning their back on the US dollar, but there are also nations who want to still embrace the dollar.
Yes. Well, even when you're looking at those nations that are embracing the dollar, it's because our currency is devaluing slower than their currency, and the dollar is still more recognized, rather than really understanding that this is good money, and this stuff is just, I know people don't like it when I call it garbage, but it is really garbage. And if you look at Venezuela, their currency has more value as a napkin for an empanada, and we're all going there. So even though there are countries that are trying to tie their currency or their economies to the dollar, it's about perhaps generating some level of confidence, public confidence, but it's really only because it's losing value more slowly. But make no mistake about it, you see it every time you go to the grocery store or you buy anything. The dollar's value is going away. And it doesn't matter how many you have. It matters what you can convert it into, what you can use as a tool of barter. And that all goes back to the public and the public confidence, because every other layer of confidence, bank to bank, central bank to central bank, market to central banks, the last level of confidence in this system is the public confidence. And that's why it is so critically important to hide what's really happening in the real gold market, in the physical only market, which has been making new highs, well, in especially up at that 1% level, the rarities, that's all-time highs, all-time highs. Whereas when you're looking at the more normal collectible market, which still is a physical only market, that had its breakout a while ago, right? So for the spot market to now be breaking out, it is all going to get more visible by the public. And you can say, you know, bye-bye, because once that confidence is gone, there is no more confidence left. There's your hyperinflationary depression. There's your reset into the new system. And what are you going to have to protect yourself?
And I guess to wrap this all up, because I know we threw a lot of information at folks right now, and this is really the start of our outlook, right? And your views of how you're preparing for 20. I know you're always preparing, but and you know, you warn of, you know, your concerns about a major financial crisis. I mean, heading into 2024, what's really at top of mind? I mean, you mentioned that we didn't even talk about CBDCs, but I mean, they're not even hiding it anymore. I mean, everyone must have seen the IMF headline saying like, there's no turning back. It's coming. But
exactly.
Top of mind for you, 2024, what are really things that you want to focus on, or news items that you think we can't
without a doubt. Right. I mean, without a doubt, it is the Treasury market, because that is the foundation of the system. And it is illiquid. You cannot go in and sell a large block. You have to break it down into itty bitty pieces. So that's one thing. The other thing that I'm also looking at, although not as heavily as that, I would say that and the debt markets and all the need to roll over a lot of risky debt is top of mind. But I'm also watching what's happening in bank outages and people having trouble accessing accounts because everything is done online. And so I think that there might be some, and I could be wrong about this. This is just my opinion. I don't have fact in it. But when I see, it seems like there were a lot more outages and the loss of people's ability to access their brokerage accounts, their bank accounts, etc. And they're saying, oh, well, a little glitch over here, a little glitch over there. I think we may see a lot more glitches, and so I think it's absolutely critical. I think it's critical for people to have a plan and execute it. And you know, part of that plan is having some cash, even though it's garbage, it's still the recognized tool of barter outside of that banking system. Do I think we could see a bail-in this year? Maybe toward the end of the year. I don't think at first, but maybe toward the end of the year would not surprise me, because I'm looking at the opportunity that they had. And remember, it wasn't supposed to impact the public.
Right.
The banks were supposed to put more money into that DIF fund to bail out the banks, but it's lower. The most current report is showing that it's even worse and less than what they had when Fed Chair Powell and Janet Yellen bailed out the banks. Don't call it a bailout, but they do have that on their books. Bailed out the banks in March. So bank failures, bail-ins, Treasury market, and accessibility are, I think, going to be really interesting this coming year.
And you just reminded me of something, because a lot of folks ask me, what is that Calendly link in our description of YouTube. But
mm-hmm.
if you're interested to know more about what Lynette's talking about, I always say if you want to explore more of the subjects, you can, schedule an appointment to speak with one of our colleagues about the topics we cover, or if you need a strategy surrounding gold and silver, because I do realize it can be overwhelming for a lot of people. But once you break it down, all of a sudden it just makes a lot of sense. That said, yes.
It does. And the other thing is what we're talking about here are repeatable patterns.
Yes.
Because people are confused, right? Even when you're listening to the talking heads, wow, this hasn't happened before. This hasn't. But the reality is when you step back and look at a longer picture, a longer term picture, what you see are these repeatable patterns happening over and over and over again. So, if you click that Calendly link, our strategy at ITM Trading, because I've been studying currencies and currency life cycles since 1987. You've been in these markets for a very long time. Do you know anybody else that has been studying currency life cycles since 1987?
I don't think so.
Right?
You take the crown.
So, but the key really is it's not rocket science. You just look at that pattern. It tells you where we are in the cycle, and then you know what to do to protect yourself. And you can get all of that information in the Calendly link. Set up a strategy, but get it executed, because I don't think we have much time left.
And on that point, well, I wanted to end it on two lighter notes. So one, I thought of you when I saw Elon Musk unveiling his new cyber truck that apparently is bulletproof. And he was speaking, this is the truck to own for the coming apocalypse. So even Elon Musk is preparing. But I was like, would Lynette get that truck?
Well, the problem is you can't fit a bicycle in it.
So you want a bike rack?
Well, it's not. I want to be able to put stuff in it.
Okay.
Even though I have everything I need at the bug out location, I still need to put my chickens from down here in there and get them up there. But yeah, I might. Okay. I've looked at
the range isn't. The range is not long enough, right?
No. Well, fortunately, in a bug out location, you really want to be close enough that even if I had to walk, I could walk.
Yeah.
I mean, it would take me a minute. I'm not denying that. But if I couldn't get through on the roads, we're thinking about putting in a helipad. I mean, yeah, you want to have a strategy and a way to fulfill your goals.
Yep.
And my personal goal is to create a safe community for the community that I've developed so far and my family.
Yeah, it's a beautiful thing.
And you're included in that, Danielle.
I'm so blessed for that. And the second thing I want,
although you're a city girl, I think it will be very fun to get you up there.
I really am. Anyway,
we have to take images of your face along the way.
We will do that. Okay, but second, I have been following these holiday Christmas characters since I was born, but I didn't know they had a name until I came to your house and you said, "Oh, I can't even remember, the island of
Misfit Toys."
I didn't know that was their name. Anyways, I love the island of Misfit Toys, and Lynette Zang recreates this at her house. We have a photo of it. I love that.
Yep.
And I love how, what were you saying offline? Because we are all just a bunch of misfits.
Well, aren't we though? And that's part of what the people that see what's coming. So the people that listen to you and me and others in our arena, they feel like they're misfits because everybody else looks at them like they have, two heads or a unicorn, head with a dog body or whatever, misfits. But we're not misfits, and people also feel like they're in an island. They're not on an island. They're not alone. So you're anybody that sees and understands, or even sees what's coming and attempts to understand it and prepare for it, you are not a misfit. Although we're all misfits, to your point, Daniela, and you're not really at an island alone. There's lots of us out here. That's the importance of community
Yes.
and coming together and supporting and helping each other.
Love that. Well, on that note, I want to wish you a wonderful holiday season and all the best, despite all the ugliness. Sending love, lots of it your way. Thank you so much for continuing to educate us all. Thank you, thank you, thank you.
Oh, I back at you because you do such a phenomenal job. And, honestly, I'm glad that you're with ITM because you are like the best interviewer. That was never my strong side. Deep dives, that kind of stuff.
I don't know.
That's my strong suit.
Well, and then now we're working together. So could you just imagine what 2024 will hold? We're just scratching the surface.
I can't even. It's going to be fabulous.
That is the limit.
Yes.
All right.
Yes.
Well, Lynette, we will speak to you soon. And thank you. Thank you again. And thank you all for watching. We'll have more incredible content coming your way. So be sure to stay tuned to the Daniela Cambone Show here only on ITM Trading. And don't forget to sign up at danielacambone.com to stay on top of it all. That's it for me. We'll see you next week.